when I'm looking at the numbers, Mr. Jain, compared to what you did in FY20 and FY21 on the revenues as well as on the profitability, or I presume you were a net loss-making company 20 and 21. 22 things have turned around, as I look at it, quite materially. Yes. So what went right in FY22? And how does that improve in FY23 and most importantly in FY24, when in a lot of benefits from the merger or rather this transaction also come into play?
Yes. So, 20 and 21, we had an impact. Everybody had some level of impact because of COVID and pandemic. But more than that, late 19, we suffered because of the delay in receiving a lot of funds from the various state governments who were doing the projects and subsidy. And that resulted into and having defaults with the banks or the delays in payments. So the operations were kind of frozen. So capacity utilization came down. That's how we had a lot of losses. And we were also booking interest full, during accruing interest full through the P&L. Post March 22, we got the restructuring done in India. So some of the interest which was already accrued earlier got reversed. So that gain we received during the March 22. But March 22 year also we improved the standalone India operation from about 2,000 to 2,800 crores. So there was a growth and profitability in India. But more important also our overseas business. If you look at my overseas business profitability in 1920, it was hardly about $23-24 million. Now that March 22, it grew to $48 million. So they more than doubled their earnings also during most difficult period, one would say. So I think our people, our teams have really done extraordinary job. Now that's how 22 became far better than the earlier period. Going forward in 23-24, what's going to happen? One, we think India business is going to grow substantially. That we definitely see that India business will grow substantially. And with that growth will come additional profitability, additional cash flow. So that would help further reduce the debt and improve margins. Second, from overseas business, that EBITDA which was there in 22 will not be with us in 23. However, that is also going to be a profitable company. So their net profit will get added to our bottom line, to our P&L. And going into 24, with this new platform, with the reduced debt and reduced interest cost, our underlying businesses, which are most profitable businesses, the drip irrigation planting material, right? And there we see a lot of retail growth because we're putting more dealer network in northern and eastern parts of India, where we're not selling more. We would have completed the old government legacy projects and got out of it, so that would further free up the cash. So as a combination, and this would allow us also, I would say, to buy raw materials, etc., in a much better way. And as we increase more capacity utilization, fixed cost absorption will become better. So overall, we see going forward over next 2-3 years, company to sustain a very good high double-digit level of growth into its core businesses and creating internal accruals through free cash flow, which would help us to reduce the debt. And meanwhile, rebuild also the food part, which is food is a subsidiary, and that also suffered during this period. Our focus is also on to rebuild the food part through multiple initiatives, because that is another business which is not in the focus right now as we speak about this. But I think that will also have a value monetization opportunities as we go in the future. So the idea again is to further reduce the debt what is available in India, further continue to reduce the interest cost, and improve the cash flow generation.
So net profit margins, which are about 4.5%, if I'm not wrong, FY22, you could see significant upsides FY24.
Yeah, absolutely.
Okay, great.